Hello, and welcome to Donachin Investment. This analysis is for Comfort Systems USA on the New York Stock Exchange as of 25th of July 2026 with a share price of $1,733. The full report is on donachin.ca. A hold at $1,733.60 across all three horizons. Comfort Systems is a superb business benefiting from the data center boom, but the price is extreme. A great company at the wrong price. This is a genuinely excellent company. Its latest quarter was a blowout, revenue up about 50%, earnings per share up over 90%, and a record backlog up more than 70%. With data center and hyperscaler work now the majority of revenue, it has net cash and high returns on capital, quality scores 85. As a contractor riding the data center build-out, it is exactly where the demand is. There is nothing wrong with the business. Here is the whole problem. The stock trades at about 42 times earnings against a warranted multiple nearer 17, so it is priced at roughly 2.52 times what the fundamentals justify. Even on next year's higher earnings, it is still above 30 times, well beyond where we would call an industrial contractor expensive. Valuation scores just 25. That trips our valuation ceiling, which caps the signal at hold no matter how good the momentum or the backlog. You do not chase a great business at any price. The clearest evidence that the price is stretched is what happened after that blowout quarter. The stock fell about 5%. When a company reports 50% growth and a record backlog and the shares drop, it tells you the good news was already in the price. That is the definition of great business wrong price. We are not calling it a sell. The growth is real and the balance sheet is strong. But paying up here leaves almost no margin of safety. The specific risk is concentration and the multiple. A majority of revenue now comes from data center work. So if the hyperscalers trim their capital spending, growth slows just as the stock carries a premium multiple. A painful combination. In that world, the shares can compress hard toward the bear case, around $1,200, roughly 30% below today. The business would still be fine, the price would not. That asymmetry, modest upside, large downside if the multiple cracks, is exactly why the signal is a hold. Now weigh the risk against the reward. The bull case is roughly 24% above today. The base case, the most likely, about 6%, and the bear case a fall of about 31%, so you are risking about 31 to make 24. So, our call on Comfort Systems USA, on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donachin Investment at donachin.ca. The link to the full report is in the notes below. Have a great day.